Hi everyone, this is Nikki Yu, also known as Pieces Trader. You're watching the Awesome 10X Global Market Update. Let's begin. I wanted to show to you a chart, and that would be Tesla. So this is my prognosis on the market. The market is actually following Tesla all the time. When the market had sold off, Tesla had always been the indicator. This is the chart of Tesla. I hope you can see it. We bottomed in March 5. We rallied in March 15 on Tesla. We had a higher low on March 30, rallied all the way till April 9, fell again to about May 11. Notice what are happening to these lows. March 5, March 30, and May 11, these are all higher lows for Tesla. We're in a junction point right now on whether the market's going to be bearish or bullish. We could consolidate, and that means we're bullish. We can also consolidate lower, which means that we are more bearish. There are two ways that the market can consolidate. Why am I showing to you Tesla? Tesla is the 7th largest market cap in the entire world. And at $600 billion, it is actually one of the largest index components in NASDAQ, S&P 500, and so forth. Therefore, it is not untrue that when Tesla recovers up, the index goes up. When Tesla goes down, the index goes down. In a certain way, that is also what's happened with your Facebooks, Amazons, Microsoft, Google, and so forth, the FAMGA names, Apple. So Visa, MasterCard, those are your top 10. NVIDIA, those are your top 10 names, right? So when you look at how this is moving, when Tesla is right now oversold here about $600, rising to about 650 is the midpoint. It's a midpoint, and it's going to be a crux on whether we can actually go two ways. Scenario one, Tesla rallies to $650, middle of your 760 and 600, are roughly about $700. At that midpoint, you're in a critical juncture. Will the index go up or will the index go down? If the index consolidates in an upper end region, that means we're in a bullish wave, and high growth names after significant sell-off has already been just stabilizing. Now, Tesla has only fallen approximately 30%. So this isn't as deep as you may think. It could fall $500. Therefore, a bearish case would assume that it rallies about 700, pulls back downwards, breaking that $580 or $600 area, and retesting $550 or $525. Now, that bearish case is not a problem because that's only setting up for a potential higher move in the future. But it also tells you that the market is in a consolidation manner, choppy. This is choppy. 500 to 760 is about 50% range. So this is what a Tesla can show to you. Now, this is Tesla. I'm going to show to you what's happening in the micro caps. Short-term tops and short-term lows of Tesla have been accurate to pinpoint the majority move of the index and the micro caps and the big caps. I want to show to you what's happening in some Chinese stocks. This is what Tencent looks like. Topped at about February. So most of the charts did top February 12 to 11 to 18. Most of the charts, Feb 11 to Feb 18, 2021 popped out, especially the high growth names. But some names actually topped out as early as December, January, February. Some SPACs actually topped out December. Some SPACs January. Some SPACs February. So in general, the market has gone down. The big caps, the mega Charizards that we call, have dropped 30%, whether that's Tencent, Tesla. And the smaller caps have actually pummeled down 50, 60, 70, 80% down from its peak. So what I'm seeing here is similar. Tencent dropped about 566, 27%. We're now seeing that it could consolidate to 637. It's been just consolidating here. Now, it could rally to about 640, but again, is it a box? And our base case is that it could be a box. A box, and then the rally will stop at 640, 637, and then drop again. So let's assume scenario one. What will you do? Okay, let me share to you questions that have been happening in our inner circle. During the height of COVID crisis, people asked me what happened in March 2020. And I said, well, during the height of COVID crisis, people dumped casinos, restaurants, hotel, leisure, airlines, all these so-called reopening names that are flourishing right now. So these were what I call the batter wives, so to speak. And I was one of those people buying these knives, but I didn't really hold all the way. I was trading them. For instance, during that drop, the biggest drop was actually in my recollection. One of the biggest drops were casinos, specifically Penn National Gaming. Let me get you back into the battered sell-off of 2020. If you were buying the largest drops of 2020, you would have been buying Penn National Gaming. That dropped a whopping 90% in over just months. This is February 18, it was trading at $39. Penn National Gaming collapsed in a single month, March 18, to about $4. That's Penn National Gaming. From $4, it rallied straight up to about $15 or almost times four your money. Had a higher low here at about $8, $9, and then $4. Let me just tell you, all the way till the reopening glory. Penn National Gaming from $4, if you bought in $4,000, rallied to as high as 130 to 140,000. So you can see actually that Penn National Gaming, this is not about Dave Portnoy sex scandal tapes, but because it has rallied $4 to $140,000, people are already taking profit since March, no? So as I said, not all stocks topped in Feb. Penn National Gaming topped out approximately March 15, 2021, and then has been collectively dropping, right? From about 140, almost 50% down to $70. Now, this is not an isolated case. Penn National Gaming, high moves, 10x moves, 20x moves have been dropping. When people talk about high growth names, they're not really talking about high growth names. I'd say that they're talking about 10x names, 50x names, 20x names. Any stock that has been rising from its March lows from about 20x to 30x from the lows have been pummeled down simply because of profit taking and overvaluation. Inflation fears, tax rates whatsoever, but I'd say that they dropped largely because of just profit taking. So if you see a company go from $4 to $130, this is still in a bullish territory. But a bullish territory does not obfuscate the necessity of a correction. Corrections can take a while. In this case, this correction is about 48% drop for Penn National Gaming, and this could take a while. Can it actually pummel down all the way to $50? Yes. A bad earnings can take it down this May all the way. So and also this coming July. So far, I haven't really read the earnings, but earnings surprise 114. Now this might confuse some people. Good numbers, earnings recovery. Why will the stock continually fall down? Because it's priced in. When the bad news was here, earnings was very dismal, down. Why was the stock going up? The stock can go up on bad news, and the stock can go down on good news because it was anticipated even before the news. So take note about that. Now let me show to you what's happening in some of the issues in the market. In particular, let me show you many charts. The large caps, what happened? Take note, not all stocks bottom out in the same manner. Not all stocks exhibit higher lows. For Alibaba, this was where? Why did it fall December 29, 2020 here? The news was, I remember, I think this was the Jack Ma. This was, Jack Ma was missing. Or was it some, yeah, this was Jack Ma was missing. And the Communist Party, you can't find Jack Ma. And there was a gap down here. And also the Ant IPO was derailed. Basically, it's going to be delayed to about 1 to 2 years. And there's also the Chinese regulatory scrutiny about Alibaba's antitrust policies, monopolies. Between Alibaba, the reason why this rallied from 220 to 240, why did it go up 10% a single day, gap up? The gap up happened when Alibaba was just fined a small fee of about $2 to $3 billion. That's small in comparison to Alibaba's sales and earnings. So $2 to $3 billion is nothing. It's like a drop of a bucket. It's like a rounding error for Alibaba's earnings place. So what you're seeing right now here is, take a look. We are actually in the mean reversion place. In the last 5 to 10 years, Alibaba has been growing. And the corrections, the price of volatility for a 10x move, take note, $60 to $320, 50% drop, 25% drop, 38% drop, 25% drop, 26% drop, 33% drop. Now, I'm not saying that Alibaba is for sure bottoming out here at $220, but definitely last night, the market didn't need any news per se from Alibaba. Just the sheer fact of going down to $220 and people buying battered stocks has tempted people to just buy it. They are buying it because short term, it is oversold. Oversold because $220 is the same price as what price? That was the high of 2018 and 2019. So that price is about flat. This company, big tech company, growing 50 to 100% in revenues for over the last 2 years, growing their venture capital as pie. Alibaba owns Xpeng, Alibaba owns Lazada, Alibaba owns cloud computing, and growing 100 to 200% over the last 2 years, but the market has failed to appreciate it. That's why Charlie Munger, the famous Warren Buffett's value investor, has a 19% stake on Alibaba. This is a value play for me. I bought a lot of Alibaba last night. Why? Specific. Fundamentals is good. I can tolerate a downside from $220 to $180. I'm fine with it. 30% drop is historically similar to what's been happening in the past few pullbacks. And the biggest pullback in the last 6 years was just this 50% drop. Meaning, if it drops 50%, it's just going to be $160 or $180. I'm willing to tolerate that drop because over the next 10 years, I do see Alibaba growing with their cloud business and their e-commerce and especially their venture capital businesses. So you know that Alibaba has a lot of e-commerce. A lot of people don't understand that Alibaba's growth wave in Lazada is just beginning. Lazada is a Southeast Asian play, just like what C Limited is. And although Lazada is number 2, you cannot actually underline the fact that Alibaba is the marketplace. They're 1688.com, they're business to business. They have the SaaS business, by the way. That's why do I mean SaaS business? When you're a business, you're actually selling in the Alibaba's Tmall, Taobao, Tmall, 1688.com. You're actually paying a fee to Alibaba, and that's recurring. So Alibaba is a Microsoft and an Amazon and a PayPal. Why PayPal? Because it's got Alipay inside. That ad valuation is worth $300 to $400 billion when unlocked, which is technically for free in this Alibaba valuation of $220. So that's one of my biggest picks in the in the US market sell-off right now. This is a Charizard. It's a very big mega cap, but I see this going 3x. From $220, it's going to be $300, $500, $600 over the next 5 to 10 years. You just need to wait it out. And this correction is what I see a value play. Now, let's talk about a bombed out name, battered names. I'll tell you what's been happening in the battered names. They've been down 80% from its peak. And if you'll notice, when we bottomed out around March 5, around here, March 5, $3 to $4. So the first rally was 30%. And then about April, it bottomed in a new low. New lows here about $1.40. So you'll see that this is already sliding 80%. Therefore, I'm noticing that these stocks, because they're bombed out, just like the battered names of Penn National Gaming, Scientific Games during the March 2020 sell-off, I see value. Why am I seeing value? If I study ASXC, which was TransEnterix before, it is a robotic surgery play similar to Intuitive Surgical. Got an FDA clearance approved. They've got Senhan systems. They've got hospitals using the system. So it's not a fly-by-night company. And at current levels, less than $100, $200 million, I see this market actually selling off microcaps at no warranted, at really just nothing because it's microcap. They're selling everything, microcap. They just sell it at like a baby under the bathwater. So it's not a surprise for me that in the market rallies, notice 70% rally on ASXC. From 150 rally to 230. I know that in the short term, there will always be a seller $230 to $3. In the short term, that could take about 3 to 6 months. But these are the ones that I find value over time in the next 6 to 8, 12 to 2 years, no? You'll see this go back to about $3 to $4. Let's say $7 is your peak. It's going to be there about 5 to 6 years. So I'm going to have 7x move on ASXC. An 80% bomb name like ASXC is something that nobody is willing to buy, and I'm a contrarian there. Let me show you another bombed out name. EHang is a bombed out name. 80% down, 85% down. So as I said a while ago, I like to buy some battered wives if I study the fundamentals of the company. Granted, we're in the infancy phase of drone deliveries and unmanned aerial vehicles and eVTOLs, electric vehicle takeoff landing. I'm pretty sure you'll see videos say, I hate EHang, there's a fraud, they only sold 80 EHang 216. Look, if you really studied it, they're selling 240 EHang 216 this year, and they're gonna do another next year. They already have their FAA flights approved with China and 8 other countries. They're on the pace to be the first mover advantage versus Lilium, versus Joby Aviation, versus Archer Aviation, which are trading where? $3 to $5 to $6 billion market cap. And where is EHang's value? It's just $1 billion. You can argue $1 billion is expensive for a company with revenues of just maybe, 240 vehicles times 500,000 is just how much? Something like $100 million. So you'd argue 10 times price to sales. But take a look at this math. How big is the urban air mobility when I can use $50, $100 taxi play and fly over the top? I think that there's a marketplace here. And that's why everyone's willing, whether it's Toyota investing in Joby Aviation at $6 billion, whether it's Bailey Gifford investing in Bailey Gifford invested in Lilium. And who's Bailey Gifford? For those who aren't aware, Bailey Gifford invested in Tesla early on. It takes a contrarian to see the future. And Awesome 10X sees the future. The future is eVTOLs. And I'm willing to put my money there, whether you like it or not. And that's the same way why we're buying wearables. Take note what happened in the market. Copen and Boozy fell 60%. Whether you bought it at $5 last night, $5.70. Notice what happened last night. A lot of charts were all bullish candles. Granted, this could rally to about $8, $9, and then sell off again. And then even go down to as low as $4.50. We've seen some microcaps, and Copen is a microcap. It is so microcap that despite the fact that they are partnered and has patents with Google and Samsung, that people actually don't care. And when they don't care, we always see value. What happened whenever we see value at 10x? We've been buying Copen since $1. Rally to 13. What is this that you are seeing? A 50% drop is what you call a bullish retracement. Now, a Fibonacci bullish retracement could fall 50%, 61.8%, and so forth. But usually, that is not a bearish sign if it rallied 10x. You've seen companies go 10x. The reset is just to escape the froth. The latecomers who bought the froth, they bought 9, 10, 11. They're the last player. But if this is really going to be an S-curve, and why is it an S-curve? Because after smartphones, guys, the biggest billions of devices is Google Glasses, Apple Glasses. You've heard it. Augmented reality, virtual reality. I'm going to share to you a few more. Unity tanked. How big? 60%. From $70 to $170, we've already made a reset back to $75 last night. Last night, yes, it recovered to $84, but it will have resistances at $100, $105. So those are still there. We're not out of the woods, but I'd argue that because each stock does not have a top and a bottom that is coincidental, I'd be looking in the next 3 days how Tesla's gonna move, how these additive manufacturing is gonna move. Take note what happened last night. A lot of short covering. 3D systems, rally 10x, we argue that it's already escaped the bearish markets. So for the last 10 years, 3D systems or additive manufacturing or 3D printing has been in a bear market. But what happened in 2020 and 2021? The inflection point was when people saw value with electric vehicles. 100 times cheaper, factory automations, artificial intelligence has really progressed such that 3D systems, nano dimension, they're buying AI companies, and they're solving a definitive problem, which is you want cheap vehicles and you want it automated and done ASAP with no inventory needed. Who can do that? Nano dimension can. Desktop metal can. Stratasys can. And Markforged can. Right? So what are you seeing? Last night, bullish candles all over. Bullish candles in the additive manufacturing sector. So granted, I know Nano Dimension will have a selling pressure here at 9. Perhaps the bounce tonight is just going to be tracked at 7 or 8. The first bounce was here. Nano Dimension, 6 to 11. And then sold all the way back to about 6. Then rallied to 9. And then back to 6. It even dropped about 5.78, 5.61. I'd argue that even if it goes lower highs, it's going to bounce tonight. The bounce would probably travel to about 7 or 8. Let's discuss the majority bullish moves of the market that just retraced. It's still bullish. What happened exactly in renewable energy? Still bullish, an apex move. SunPower, you're buying at 7, rally to 56. This 60% decline is what? It's like a Christmas shopping list in me. That's why we said this may take advantage. At $20, it bounced last night, $22. It could rally tonight to about 24, 25. You'll get some short-term selling pressure. But I'd say that this one will consolidate. My scenario is that this consolidates. If it drops, you've got another new low here at $16. But definitely, any drops further is just going to be another buy more. We've already dropped 60%. And this drop to $16, if it will ever happen, is a buying opportunity. Any rallies, while there will be sellers, is already, I think, less momentum and less downside pressure. How would you know this? Put an RSI. Use the pressure on whether the markets are falling, the prices are falling, and whether the market will actually have a bullish divergence. So far, I'd say, the additive manufacturing was the first to show to me that we are actually hitting really good moves. 65% drop, this could rally to about 24. Granted, you're right. The markets can consolidate for the next 3 months, but I see opportunities in this consolidation and not really bearish. I'm also taking a look. Even if nobody likes Fastly, the rallies would be sold here at $60. The gap down, right? At $50 to $60, there will be a lot of sellers. But over the next 3 months, any drops to $30 is a great opportunity to buy a secular winner. Let's take a look at companies other than charts. I'll take a look at any questions that you've got, but I made an Excel sheet of how many bombed out names there are. I want to prioritize in my portfolio. My sector loves are really clean energy, and a lot of healthcare names that are that bombed out. Bionan Genomics, ASXC, that's a good play. So I like good names and infant names. Hi, if the Nasdaq falls 10%, will small caps still fall, given that they've already retraced more than half from all-time highs? Technically speaking, the downside can never be known, but at 85% drops on some small caps, you'll notice that they're just consolidating. I'll show you what's happened. ABML actually had a higher low. This fell 80%. This is a micro cap, fell 80%. It didn't fall back to all-time highs, to all-time lows, even if the markets like Nasdaq was falling. It could just retest here at about $1. Let's take a look at some small caps here. I'd say that GSAT would just consolidate here at about $1 or 85 cents if it continuously falls. So at 70%, it looks like it doesn't want to make new lows. It's just going to consolidate and retest. So a retest is going to happen if the Nasdaq falls. If the Nasdaq falls, you have to take a look, of course, at how the Nasdaq will only fall if Tesla will not break $700 and if it just gets rejected at $700. So the Nasdaq will fall if Facebook gets rejected again at $320 here. So when you're thinking about the Nasdaq, you have to take a look at what's happening Facebook and Amazon. If Amazon rallies to 3-4 and gets rejected, As you'll notice, these spam gas are just in a consolidation. Take note of what's happening in your Apple's consolidation, right? So if Apple will just consolidate here at 138, then that means that your NASDAQ is always trapped at where? $14,200. So you're always trapped here at 14,000. So in the short term, I'd say that the best case is that the market is just consolidating here. So just consolidating. We can actually consolidate for about 6 months. What chart did that? Microsoft. Microsoft actually was consolidating here and then eventually went up. Notice here, the entire year, Microsoft did nothing but consolidate. Notice here as well, Microsoft was just consolidating in 2018. Right? I want to show to you a few things, guys. A lot of people that you'll hear in the headlines are saying, but technology and growth stocks are not where you should be. Wrong. It depends on your time frame. This is QQQ versus the SPY. NASDAQ versus S&P 500. Yes, in the short term, you could see that the NASDAQ has underperformed since February peak, January, February peak to current May, because a lot of NASDAQ stocks were falling down. If you compare QQQ versus SPY, your money has been profitable with SPY versus QQQ, which is your S&P 500. But in the last year, 2020, notice 30% outperformance with your NASDAQ. Now, it's more obvious if you take a look at the last 7-8 years. 2013, 0.45 to 0.85, your money in NASDAQ is more than double versus holding a SPY. It means that if your SPY, your S&P index is up $10,000, your 10,000, 20,000, your NASDAQ doubled that to $40,000. You want to understand how huge ARK genomic and ARK funds have been doing versus the SPY? If you're lazy and you don't want to think, just cost average the SPYs and you're cost averaging S&P 500, the answer is wrong. You cost average ARK Innovation Fund. This ARK Invest 2016 till 2021. The reason is while it's consolidating in 2018, this was a 20% consolidation. Over time, broke out. So meaning your money here, just so you know, 400% up versus a 40% drawdown. Your S&P 500 has outperformed your ARK Invest in the last where? In the last February till about May to June. I'd estimate that the ARK sell-off is overdone, exaggerated. Therefore, what did I do? I bought some of the top companies in ARK Invest, which is Teladoc. I like Teladoc and Zoom. 50% down here, I went in. I bought Teladoc last night. I bought some Baidu here. Robo-taxis, here about 50% drops. Generally speaking, guys, the opportunity is there for you to take advantage. It's up to you whether you want to make money or not. Small caps, 80% down, could go down, but I prefer actually having some small caps and also some big caps. Definitely, I am not shy to buy a lot of Teladoc and Zoom and Baidu 50% down from its peak. I think that's a great opportunity. But at the same time, you see 80%, 85% drops on ABML, ASXC, GSATs, right? How big has the drop been on some Alpine, some Plymouth Rock, right? These have been the most astonishing moves in the short term for me. So notice, drop 75%. That's why you've got a short squeeze rally here from about $2.4 to $5 or 100% move in just a week. So if you want to make 100% in a week, you have to bite the bullet on some of these micro caps. Micro caps have the biggest value versus the total addressable market they are in. Ask yourself, with so many electric vehicles out there, do you really want to miss out on battery recycling? Seriously speaking, think about it. If some SPACs have fallen down to about $8, like Ouster, why did I buy it? Because I know that there's value there. Ouster at $8 rallied to where? 10. 8 to 10, 8 to 10, could drop to 8.5, rallied again to 960. So what is happening with Ouster? It's a consolidation. It's a clear Darvas box here about $8,750 to about $11.50. Every time you buy Ouster at $7 to $8, you get to sell it at 10 to 11. At 25% move every single 2 to 3 weeks. So it's up to you whether you want to make money or not. So hope that you learned something, but definitely May is a shopping buy list for me, even if the market will consolidate it all day long. Choppy markets, yes, but there's always opportunity to make money here. So of course, the other people would just sell rallies and buy back dips. Sell rallies, buy back dips. That's really the market. Choose your stock and make money from it. Thank you.